Good morning, everyone watching live on BAM YouTube. Let me know in the comments where you are tuning in from. The Hot Sheet covers what you need to know about the real estate industry in a 24-hour time period. On today's Hot Sheet, I will discuss new home sales, mortgage applications, cash buyers, and the problem with being house rich. Today is Wednesday, April 26, 2023. I am Byron Lazine, and the Hot Sheet starts now. All right, give this video a like if you are just jumping in here, and consider sharing the video, the stream, with someone who wants a 24-hour look back on all things housing. This is the only show on the internet that goes live daily with your housing update. Before we jump into, we've got a lot to cover. We've got that new home sales report that I referenced yesterday. Before we jump into it all, this is officially the last call for the BAM Mastermind on May 5th. If you are enjoying BAM and the content that we produce and you want to see exactly how we do it, and not only that, but get a blueprint for your Instagram, a blueprint for your YouTube, and how to edit all of the videos, exactly how we do it over here at BAM, make sure you click the link below for the May 5th Cinco de Mayo BAM Mastermind. It's going to be hosted down here in Naples, Florida. We have a couple seats remaining, and I'd love to see you here. Okay, let's jump into the new home sales. Monthly new residential sales for March 2023. The U.S. Census Bureau and U.S. Department of Housing and Urban Development jointly announced the following new residential sales statistics for March 2023. This release came out yesterday just after our live stream. So total number of homes sold. This is new houses, new construction. So this is not, existing home sales or anything like that. This is new homes, newly built homes. Okay. New houses sold. This is a seasonally adjusted annual rate, 683,000. So that's annual. New houses for sale, 432,000. That's also seasonally adjusted. Median sales price was $449,800. The average sales price for the month of March was $562,400. This is anything but affordable when we're talking about new home development. I know in the comments, and you can let me know in the comments what's happening in your market, that we've had some of you from, I think, Caulfield County, Texas, report, hey, you can get 3-bedroom new construction under 300,000. I think OKC was another location in the live chat here on the stream in prior shows where it was like, you can get a 3-bedroom under 300,000. Well, if we're just looking across the country, that doesn't reflect what's going on in new home construction. Those two locations are not the norm. Okay. Median sales price, again, $449,800. The average sales price was $562,400. That is what I typically see in most areas of the country when it comes to new home sales. This really unaffordable product for most home shoppers, for most buyers across the country. We don't have an abundance of inventory coming in that, say, under 3.25 or even under 350 price range, which in a lot of markets would start to be considered affordable. Some markets you're going to have to get below $300,000 to be considered affordable. Okay. But the good news is, and here's the big news for the month of March, we have a 9.6% increase in sales of single family new built homes for the month of March. Okay. Above the revised February rate of 623,000. So we're at now 683,000. This is still 3.4% below the March 2022 estimate of 707,000. And Jody was the agent in OKC, where they have homes under 300,000. They have a home builder that starts at 210,000. And listen, it's not my opinion. It's based on the data and we're looking at the data right here, that is abnormal. That doesn't exist in most markets in America. The average sales price for March for new construction was $562,400. That's 300 plus thousand more than where the home builders in OKC are starting. So maybe an opportunity to go in and invest in OKC. Single family home investors may be looking at that market if there's a strong rental market there. That I do not know. New home sales, again, up 9.3% for the month of March. These charts and all of our sources will be down below in the daily download. You can see here a strong rebound here from prior months for new residential sales. A lot of the builders had a rough fourth quarter, but they've seen a much more encouraging first quarter in 2023. Currently, we sit at 7.6 months of inventory for new homes. Okay, so that's 1.5 months above a normal market. So it is considered a buyer's market for the new home product, probably not in OKC, but in these markets where you're getting closer to the average of 500,000. That compares to 2.6 months of inventory for existing home sales. That number did go up. Okay, so that number we just covered here on a recent stream did go up to 2.6, the 7.6 for new construction. You can see here a gap is starting to, starting to get closer together anyways, with the 2.6 being up. The 2.6 needs to get closer to the 6 for new home sales for it to be an easier buyer market, a more normalized market. Okay. The one thing that worries me with new home supply is this price point of 562,000 being the average, the median being 450,000, because they keep building that product. And if we've got 7.6 months of supply already, could some of these homes sit there a little bit? Could some of these homes not potentially move if we don't have enough of those buyers that are outside of the affordable price ranges in many markets? The seasonally adjusted estimate of new houses for sale at the end of March, again, was 432,000. This represents that supply of the 7.6 months at the current sales rate. So we'll see what happens here in April. If that number goes up over 8, that'll be something that builders might worry about a little bit, okay? Because 8-9 months is certainly a buyer's market. They're going to have to make more concessions when dealing with buyers. That being said, Housing Wire does say that these new home sales are proving Wall Street wrong. Home builder stocks are up big right now. Don't they know that the new home sales apocalypse is here? The one that says we have too much inventory and millions of vacant homes in the U.S. Okay, so that's alluding to this inventory being up over 6 months. According to this theory, we have more homes under construction than any time in history. It's not 2008 all over again. That is not the truth. The 2008 story, which we covered a little bit yesterday, is so unlike what we have today. And we've got a couple charts here, or at least one chart that I want to share with you to kind of show where we are at with new homes in comparison to 2008. This is, of course, being pulled off of the St. Louis Fed FRED website. So you can see that new one family housing units sold got up to 1.4 million over there in 2006. Okay, we just barely hit during the peak of COVID 1 million, and now we're again down to that close to 700,000 range. You can see the line here where we're at today is nowhere close to that 2002 to 2006, 2007 run up of new home sales. These two markets look incredibly different, and they're 15 years apart. Okay, so to compare new home sales right now to what we're seeing in 2008 is just a little bit crazy. Okay. So if we look at permits, okay, the housing market is still not good enough to start issuing new housing permits. That's when you know housing is out of the recession. Okay. When builders can start building again. It's that simple, according to Logan Mohtashami. And here is your housing permit chart. Okay, so permits well below where we were in that market. The data below is a significant improvement for builders as housing completions are still rising while their monthly supply is falling. I'll be curious to see if that monthly supply continues to fall. But you see here, again, well below the levels of 2008 for new homes. So builders are in a much stronger position than 2008, just like the banks that are putting out mortgages. Okay. So when it comes to mortgages, I know we saw what happened with First Republic yesterday and what continues to happen with them today in the pre-market. First Republic is getting crushed. Their stock's down over 50%. But when we talk about banks being strong as it relates to the 30-year mortgages that they've handed out, incredibly strong. Foreclosures are near an all-time low. Okay. So when supply is 4.3 months and below, it's an excellent market for builders. Supply is at 7.6 months, like we noted before. When supply is 4.4 to 6.4 months, it's an okay builder market. When supply is 6.5 months and above, the builders will pull back on construction. And so what Logan's arguing here is, as they may pull back right now, being at the 7.6 months of supply, which isn't going to help long-term inventory, but it'll help them catch up. That's why he believes that supply number will come down in the future and be able to sell off where they're at. They're nowhere close to, 10 plus months of inventory where they got to at the end of 2008. So they're still in a position where they can pull back and make the moves necessary that they need to. 71,000 homes are completed for sale right now. That's only 1.2 months of supply. 94,000 homes still need to start construction. There's 1.7 months of supply built up there. And 267,000 homes are under construction. That's 4.7 months of supply. And that makes up the 7.6 months of supply. Now, months of supply is a little bit higher than recent memory for new construction. As you can see here, we're not at that 2006, 7, 8 level at all, but we're trending higher than at any point in the last, since 2013 anyway, 13, 14, for supply on new homes. Now, it hasn't been as sustained as that 2000 to 2010 range that you can see where supply went through the roof. This is really just builders picking it up during COVID. But you can see here on the chart that we're at a higher level than we've experienced, which is well needed with the lack of inventory. You can argue, some argue 3 million homes short, all the way up to 7 million homes short in this country. Ultimately, I think the supply is going to sit around for a little bit, just based off of those numbers on where they're coming in on prices. Over 550,000 is the average and 450,000 is the median. And we just don't have the majority of the demand looking at those two price ranges across America. Demand on mortgage applications is up. That's great news because it's a huge recovery from last week's plummet. Mortgage applications increased 3.7% from 1 week earlier, according to data from the Mortgage Banker Association's weekly mortgage application survey ending in April 21. So yesterday we talked about Monday on the stream, we talked about inventory being up. Okay, over 8,000 homes across America. Let me know your market if inventory is up this week. I'd love to know in some specific markets if inventory is finally going up, if you're seeing new listings going up and coming onto the market. Okay, across America, we saw over 8,000 homes come onto the market for active inventory. It's going to be really telling what happens this week. So Monday's data is going to be important because I don't know if that was pent up from people, waiting until after the April holiday to get their house on the market. But we finally saw that boost, and hopefully we saw the bottom of inventory in this spring market. Okay, so we saw 8,000 plus homes. We've also seen this week the 10-year, especially yesterday, drop. We got all the way down to 6.5 yesterday on the 30-year fix. So finally, after 2.5 weeks of the 30-year fix going up, we got back down to 6.5, which has been a pretty decent spot for buyers. We've seen demand and showings and activity on the weekends pick up at that 6.5 number. So inventory up, 30-year back to 6.5, not like, the floodgates haven't opened on the 30-year fixed or anything like that, but 6.5, we've seen some potential, power and interest from buyers at that number. And now mortgage applications are up. So Realtor.com said that last week was the best week of 2023 to put your home on the market, to list your home for sale if you're a seller in 2023. I don't know. Could this not be maybe the biggest weekend for home shoppers and buyer agents and real estate professionals advising home shoppers this weekend right here? You got mortgage rates that have ticked down in the last couple of weeks to 6.5. We'll see what happens today. So I see that the 10 years up a little bit. That's not the full story of the day. Obviously, it's just here at 9:46 a.m. Eastern time. Mortgage applications are up and inventory is up. Could there not be opportunities this weekend? This could be one of the big weekends of the year for residential real estate. Let me know in the comments how you feel about that. And year over year, with this increase in mortgage applications, we're now negative 28% for mortgage applications year over year. But that minus 28% is the smallest year over year decline since September. We've had numbers in the 30s often over the last couple of months, and minus 28% year over year decline in mortgage application is the smallest decline since September. So a lot of positive signals here as we start to really get into the heart of the spring market right now. So when people say, hey, there's a lot of interest, there's a lot of demand, I caution agents to use that, because I've been pointing towards this mortgage application number a lot this year. We're still, we still have 1 out of 4 buyers, mortgage application buyers evaporated from the market with this negative 28% number. And a lot of people say to me, well, Byron, there's just so many cash buyers, though. There's so many investors with cash. They're coming in and they're buying these homes. Well, Insider just put out a piece that says, no, there aren't more cash buyers in real estate these days. Let's dig into what this says, okay? Cash deals are up in real estate markets throughout the country, but that's not because prospective home buyers are shunning mortgages and deciding instead to buy homes without financing. It's because those very buyers who rely on mortgages are choosing to take a back seat and wait until rates come down. Let me know if you're experiencing that, where some buyers who have been looking for a while and they're relying on the mortgage are sitting on the sidelines drinking some Gatorade right now, catching their breath. When mortgage rates double overnight or over a year, people that need to finance pull back a lot quicker than people who pay with cash. So the cash are staying active in the market. This is according to John Miller, real estate appraiser and founder of appraisal firm Miller Samuel. He told Insider, it disproportionately enlarges the share of cash buyers, making it look like more cash buyers are coming into the market. So what he's saying is cash buyer market has remained constant. It's remained the same. But because we only have 3 of the 4 mortgage buyers that we had this time last year, we have 28% less mortgage applications, less mortgage buyers this time. It makes that cash buyer pool look bigger, but it's really the same. Mortgage rates have been edging lower, blah, blah, blah. We cover mortgage rates every day on this show. Hit the thumbs up for that. Researchers at Fannie Mae predicted that 30-year fixed mortgages will trend down throughout 23 and 24. That is yet to come to fruition, Fannie Mae, but they are predicting we'll end up in the fives by the end of the year. So we all look forward to that if Fannie Mae is actually right. Using data from Miller Samuel, Bloomberg reported that 50% of Manhattan home purchases in the first quarter were made in cash. Not a great indicator of what's going on across America. Certainly Manhattan, a beast of its own. Or to put it another way, without financing from a mortgage, up from 39% in early 2021 and 47.7% in early 2022. It marks an all-time high in Manhattan since the appraisal firm started tracking the number 9 years. I think it was 9 years ago. Way to go. Good for them. Real estate markets from Orange County, California to Miami Beach are experiencing similar surges in cash purchases. In Orange County, Miller found that 44.3% of home purchases in the first quarter were made in cash, compared with 43.7% in the same period the year before. Okay, so Miami Beach, 65.8% of home purchases were made in cash in the first quarter of 2023, compared with 63% the year before. Okay, so some big numbers there for Miami Beach for sure. According to Mortgage Bankers Association, the number of applications for okay, we just covered the updated Mortgage Banker Association. So there you go. This is a just according really to that one appraiser. Take that for what it's worth, but I would agree with how much transactions have come down. We're trending towards a seasonally adjusted number of 4.4 million when we were experiencing over 6 million transactions just a short period ago in the last couple of years. When transactions have come down that far and the mortgage applications have dropped that far, it does feel like, to me, cash buyers haven't really increased. It just seems like there's more of them in the game because of the gap that we've lost in mortgage buyers. Okay. Interesting piece here that I want to share with you guys. This is from an article, A Wealth of Common Sense. Financial advisor Patrick Kenny sent me this over. Pat's a 5 a.m. call moderator on Saturdays. Really interesting piece. It's by Ben Carlson over at A Wealth of Common Sense. According to the National Association of Realtors, and we covered this number, the median price of a house in the United States is worth $190,000 more than it was a decade ago. I titled this article, "A Problem with Being House Rich." Okay. So that might sound like a good thing, and I think it is a great thing, personally. The median price of a house in the United States is worth $190,000 more than it was a decade ago. It's a great thing for homeowners, for people that have gotten in and purchased the house, okay? If you owned a house for more than 3 years or so, you're likely sitting on some nice gains. So gains were not evenly distributed, but across the various income levels. So we covered this generational wealth gap from NAR. Okay. Love this chart that they put together. I think it's really easy to understand. You can grab it down below in the daily download. Okay. So wealth gains by housing in income group. Okay. So blue would be low income, orange would be middle income, and then the gray bars would be upper income. So 5 years, the wealth gains per income group, 74,000 for low, 84,000 for middle income, and 101,000 for upper. 7 years, you've got 85,000 for the lower, 104,000 for middle, 122,000 for upper. You go 10 years, you got almost everybody at 100,000 or above, 100,000 for lower, 122,000 for middle, 150,000 for upper. Now we covered these numbers, and you see that 15 years, they drop down. Okay. So the fluctuations in the market reflecting there. Okay. So we covered that number here on a prior stream. You can go check that out. But what we didn't cover is this comparison that a wealthofcommonsense.com is making into purchasing stocks. The pandemic related housing gains are unlike anything we've seen before. So it's not like you should continue this, expect this to continue. We don't expect that to continue, but the housing market is more important for middle class than the stock market. You see those incredible gains for middle class, and it's more important for middle class than the stock market, argues Ben Carlson on this piece. The simple fact that home ownership of residential real estate is more widespread. Okay, so listen to this. The top 10% controls nearly 90% of the stock market, while the bottom 90% owns 55% of the housing market. We've said this before, less than 3% of single family homes are owned by investors. So these investors or Wall Street coming in and buying all the single family homes does not exist. Okay, 90 doesn't exist at the level that some people are trying to scare others on the internet into believing. Okay, the bottom 90% of income levels own more than 55% of the housing market. So it's a completely more diverse group of income earners in housing than it is in stocks. Stocks is really just the top 10%. Okay, and really, and when we actually did this a couple weeks ago on a stream where we talked about back in like the 1920s, really all stocks were owned by the top 1%. So it's loosened up a little bit, but nowhere near what you have in housing. So households Q4 in 2021, stocks, the top 1% owned 54% of all stocks. The top 1% owned 54% of stocks. Okay. Real estate, the top 1% only owned 14%. So great table. I have this down below for all those idiots on Twitter that want to say, oh, I saw somebody saying, oh, you guys are pushing real estate. You're just trying to make the top 1% richer. Well, only 14% of real estate, 13.8 to be exact, is owned by the top 1%. Okay. The 90 to 99%. Okay. So they own 30.7%, and then 50 to 90% owns 42.4%. The bottom 50% owns less than the top 1%. So that's the opportunity, this affordable housing. That's the opportunity to grow right here for home ownership. The bottom 50% only owns 13.1% share. And that's only going to come if it's not going to come with these mortgage opportunities where you can save money on your mortgage. It's going to come by the government actually incentivizing the development, the supply of affordable housing, and saying, hey, with these incentives, you can't build those $550,000 average new construction or those $450,000 median new construction. You got to build us some of the product that we're seeing, according to Jody, in OKC, the 210,000s. Okay. It's no fun for those who have missed out on the gains, of course, who have wanted to buy a house and see these gains. We know that every decade real estate does gain. So I would still encourage those folks to get in. If you're a real estate advisor, show them that chart that we've covered here, where in the last 4 decades, homeowners have gained 25, 30, and 40+% in each and every single decade. So if you get in for 10 years or more, you're going to be good. The middle class has a lot riding on their home. Composition of household wealth by wealth class. Okay, so primary residence in the top 1% versus their financial assets, it's not even close. That light blue bar is their financial assets. Let me switch over here to a different view of this. Okay, so that light blue bar is their financial assets, which is upwards of 75% of the top 1%'s household wealth, where real estate primary residence is, I don't know, what is that, 5%? Maybe not even. So the next 19%, okay, financial assets make up 40% of their household wealth, but their primary residence is 25%. And then everybody else, the other 80%, their primary residence makes up over 60% of their household wealth. Okay, while their financial assets, stocks, is less than 20%. It's a fascinating chart here. And if you're a renter in this country, you're 44 times less wealthy than the homeowner. If you're in the middle class, and this is maybe a helpful chart for people who are trying to figure out, should they buy a home? This chart shows you it, in order to rise the ranks in the middle class, home ownership is a really strong foundation to be able to build upon your wealth and your financial future. Okay, but Ben Carlson here in this article says there's a problem with having your wealth so concentrated in your home. For one thing, wealth gains cited in the research by NAR are on a gross basis. My whole thing is, if you don't get into home ownership in that middle class or lower income, you're not going to have money to even invest in the financial assets, because it's all going to be going out the window on something that you're not building equity in, that you can never pull, equity out of, that you're not using. You're using it, but you're not getting any ownership in it. Okay, so you have to net out all the ancillary costs involved with home ownership. Absolutely get that. And in many markets right now, because of where home costs are, it is actually cheaper to rent on this year basis. You run that out long term, that's not going to be the case. But they cite realtor fees, closing costs, property taxes, moving expenses, insurance, upkeep, and maintenance can take a huge bite out of these price increases. Plus, having your wealth tied up in your house is much different than owning a financial assets or having money in the bank. Okay. Yeah. Well, money in the bank isn't going to get you anywhere, pal. Like, let's be real. Money in the bank is just a way to decline your, financial future, because as they print more money and as inflation continues, which it'll always continue, by the way, inflation doesn't stop. It always continues. As that continues, your dollar, your cash becomes more and more and more worthless. Okay. So keeping money in the bank is stupid. Owning financial assets, how has that worked out for everybody that bought, off of Robinhood 2 years ago? You want to pull out at a 40% loss on many stocks when you're playing the stock picker game, and you're not a financial professional like Pat Kenny, who sent me this article. You're going to open yourself up to much bigger mistakes than you would buying a single family home in a location in a location you love, and a location is going to be strong in the next 10 years. Okay. You know more about the community you live in. And this is a great thing for agents to share with home shoppers. You know more about this community than you do what's going on in the offices at Meta, a stock you could buy, than you do about what's going on in Starbucks. Okay. You know more about this community, and investing here first gives you that stable ground to be able to make consistent monthly investments. And I believe you should, into the stock market, into an index fund, into with a financial advisor who can put you in position to have steady growth for retirement on top of your wealth gains that you get as being a home ownership, which is 44 times more wealthy than that of a renter. Here, a home is a liquid asset for sure. It's difficult to tap into your equity, but here are some of the options. You can do the home equity line of credit. You can do equity as a down payment. You can either sell your house and downsize, I mean, some of these things that he puts in here, they're just silly if you want to stay in the game. A reverse mortgage. Wow. This is really bad advice. So some of these things that they've listed out to try to make your home more liquid, to go and put it into, I guess, the market, is what this person's arguing, are idiotic. Okay. So, listen, I would start with home ownership, and that's the advice I'd be giving people. How can you become 44? How can you increase your chances 44x? Well, you just flip from being a renter to a homeowner, and then you can start figuring out how to get into some, monthly savings. And I would do that quickly. I'd get into some monthly savings on some financial assets. I'd rather have both. It's not one or the other. Certainly wouldn't put a reverse mortgage on. If you want to read that article, it's down below. I love the charts in there. Great job putting that together. Those are all down below for you in the daily download as well. I want to be house rich and asset rich. Hit the thumbs up if you agree with that. Let's take a look at if the 10-year is going to help the real estate industry get a little richer this weekend. And as we've done this stream, the 10-year is ticked back down. Okay, so we're back under 3.4. We were above 3.4 before we started the stream. We're at 3.394. Yesterday's number was, again, down to that 3.4 range. And so we're kind of just riding that line. We're much in better position than we were 5 days ago. We were up at 3.6. Yesterday's decrease in the 10-year meant that we had a closeout of a 30-year fixed reading at 6.5%. That's really good news. That has been an attractive range, a more attractive range for home shoppers um, in recent memory here in quarter one. So prior year was 5.32 and we're at 6.5. Hopefully this trend will continue down as we've seen in the last 4 30-year readings. Today at 3:00, we have a webinar, which is going to be sponsored by Virtue Desk. It's myself and Tom Toole on follow-up. So if you're in sales, if you're a real estate professional and you want to up your follow-up game, make sure you're subscribed to the channel. It'll be in the same tab as these hot sheets. It'll be in the live tab here at 3:00. So hit the subscribe, put that notification on for 3 p.m. Eastern time today. Myself and Tom Toole giving you everything you need to know about how to be strong in your follow-up, how to convert throughout this spring market. And that is the hot sheet, folks. We'll be back here tomorrow live at 9:30 Eastern, 6:30 Pacific time, as we are every day with your 24-hour look back on all things housing. Until then, toodaloo.